Hey there, welcome to a quick update on the Chinese trade war and how the U.S. is responding. If you've been watching the news at all recently over the past day or so, you're probably familiar that last night Donald Trump came out with an additional $200 billion of tariffs on Chinese imports. And I did a post last night just giving a warning that this is likely to happen. And now that we have details out from the administration, I want to go a little bit further in depth, but I also want to share with you the response that China has taken already in announcing they have retaliatory tariffs. So if you have money in the market, maybe you're just a little concerned about where the market is, this will be very valuable for you, and I look forward to answering your questions along the way. So with that, let me just show you the PowerPoint here, and you see that we have $200 billion of tariffs on Chinese imports. Remember, we already had 25% tariffs on $50 billion of imports. So now the total number will go up to $250 billion. And that is pretty significant because it's about half of what China sends to the U.S. So if we are taxing about half of their imports, that's going to be very difficult on their economy and on their companies. And that's why you've seen the renminbi or the yuan drop in about 10% in value year to date. That's why you've also seen the Chinese stock markets drop about 10% since June. Year to date, they're almost down about 20%. So this is having a big impact on Chinese companies because they know that their economy is driven by exports, and anytime that it's more expensive for their goods to be sold, it's going to have an impact on how many of their products they can sell. And so this is really significant for those companies, but it's also significant on a global basis because we're seeing different finance ministers like those in Japan, those in Australia, in their central banks commenting that this is not a productive environment and that it's actually causing tension and stalling investment because business leaders don't know how to react. And so that's really significant for investors, particularly in international markets, because when you have major leaders like those in Australia and Japan coming out against this, it tells you that there are other companies, other countries that are impacted by this, and that it's something that is going to cause investors to take a second look at their portfolio. Now, you probably want to know, how is this going to impact the U.S. itself? So here we have a chart that shows the current tariffs that are in place, $50 billion. It's a 25% tariff on $50 billion of Chinese exports. But effective September 24th, you're going to see an additional 10% in tariffs on $200 billion of goods. Now, that value, the 10% figure, is actually set to increase on the 1st of January in 2019. So if we haven't come to a resolution by January 1st, 2019, the tariffs are going to bump up to 25%. So that's a 150% increase there on those tariffs, and that'll impact about 50% of the goods that are exported to the U.S. So a very significant figure there and something to keep an eye on. Now, in retaliation, you've seen the Chinese have actually said that now they'll be applying tariffs on $60 billion of U.S. goods, and that will go into effect on September 24th as well. And so you see that they are reacting in the similar way just to save face and really to let the U.S. know that they have the strongest intent to defend their economy, and they believe that they're right here. So you see the details around the tariffs, 10% tariff on $60 billion in U.S. goods. Over 5,200 products will be affected. And what's interesting is that originally when this policy came out, when it was being discussed, there was a 25% tariff. and that's actually dropped now to 10%. And then some of the goods were going to have a 10% tariff, and those are dropped to 5%. And so the reason this is interesting is that you're seeing that China is actually coming out here, and they look like they're making some concessions because they want to come up with a deal. And so if that's the case, then I think that this will be very positive. It potentially could be very positive for coming to an agreement here. Now, going forward, we know that President Xi of China and President Trump will meet at the G20 on November 30th. And we'll also, at that point, we'll have a understanding of what will happen with Congress. And so that might motivate the Chinese to make a trade deal. But you've also seen Steve Mnuchin and Larry Kudlow come out and say that they are in favor of making a deal, but that China has to come with some concessions. So when we look at the milestones going forward, we see that the G20 meeting there is on November 30th, and then if they don't come to a resolution by the end of the year of 2018, that the tariffs will actually jump up there to 25%. So as a consumer, what can you expect? As a consumer, the original list had over 500 items, and the administration went through that, and they took some different items off that were subject to tariffs, things like car seats and Bluetooth headsets and things that would impact people on an everyday basis. They're really trying to minimize the cost to the individual consumer because they know that that's not a positive thing. But what we can expect here at home is that we'll probably have greater inflation. In fact, when we look at the projections from Goldman Sachs, we see that they're anticipating a mild bump in inflation for the U.S. consumers going forward. They also expect a little bit of a slowdown for our GDP, but not huge, not enough to really be of meaningful impact. But at the same time, remember that China has other options besides just tariffs to retaliate. They can depreciate their currency as they've done before. They can also potentially they could end up selling off some U.S. treasuries. That doesn't seem likely because it wouldn't help them out on a long-term basis, but it's something that we want to pay attention to. Overall, what we've seen in the market this morning is that the market has really shrugged this news off. They've not really taken any action in the negative. They have not taken any negative action, so you're not seeing a sell-off like we saw yesterday when the announcement was made. And so for that reason, we want to continue to look at the market and see where it's going, not just in the U.S. equity market, but also on the treasuries as well. You've seen some sell-off, in fact, in the 30-year bonds, and that's a signal that people are comfortable taking more risk. They're comfortable getting rid of their conservative assets like bonds and instead moving that money into stocks. So it's a lot to digest here, but it's something that we want to keep an eye on because of the size of the Chinese economy and because of the ramifications going forward. It's something that we really want to keep an eye on, especially with the holiday season coming up. If you're like me, you have kids and you buy a lot of toys and different goods that are manufactured in China, and the last thing that you want to do is pay more for those because of the economic policy. So what are your impacts? How do you think this will impact your financial situation? What are your concerns? And what questions would you like answered going forward? I really appreciate your feedback, so leave them in the comments below, and appreciate you tuning in. If you have any questions, leave them in the comments below or send me a message, and I look forward to speaking with you soon. Thanks a lot. Take care.